Welcome to the Privacy Mentor Podcast, your partner in the fight against identity theft, fraud, and cyber threats. I'm your host, Carrie Kursky. Welcome to episode 68 of Privacy Mentor. Today I'm joined once again by Kyle Kursky. Kyle, welcome to the show.
Thank you.
So we're going to talk about today something that there is quite a bit of confusion around. It's one of the questions that we get a lot from identity theft victims. And we always ask them, what have you already done? What are the steps you've already taken? And this is where we find that there's a lot of confusion around terminology. And what we're talking about today is the difference between a credit fraud alert, a credit freeze, and a credit lock. And the difference between them is the difference between protecting your credit and leaving yourself exposed or giving away some of the rights afforded to you by federal law.
So most of the time when victims call us and we ask them whether or not they have a freeze place, they think they do, but they actually end up having something like a fraud alert instead. What exactly is a fraud alert?
So with a fraud alert and a credit freeze, both of them are mandated by federal law. What a fraud alert does, it allows you to put a disclaimer or a sentence on your credit report to warn creditors about potential fraud. Typically, it's worded something like, please use caution before approving new credit, or warning there's a high potential of fraud, or things like that. And basically, in the fraud alert, it asks the creditor to contact the consumer before approving or opening that new credit account. And often you can provide your phone number. Now, that sounds like that's a lot of protection, right?
Oh, yeah.
Yeah, it sounds like that nobody's going to be able to open bad accounts because they have to call you each time first. Well, that's not always true. We've actually worked with people who have had a fraud alert and they still have had fraudulent accounts opened. Why? Well, sometimes the creditor doesn't pay attention to it, or they miss it when they're skimming the credit report, so they don't see the fraud alert. Or if the criminals or the imposters are really good imposter, they've got a good enough song and dance that they can bypass that. So that, when the person says, oh, we see you have a fraud alert, we're going to go ahead and give you a call. Oh, no, that was my old number. I don't use that because I was a victim of identity theft and that phone number got stolen. So if you call, that's going to be the bad guys. But yeah, no, I forgot I even had that on there. So these imposters are really good at coming up on the fly with things to say to bypass the fraud alert. So I would not say that that is really the best defense against new account fraud. That's when someone's opening a credit account using your identity. Now, with a fraud alert, to activate it, you contact one credit bureau and they notify the other two on your behalf. So if you were trying to get a credit freeze, which I'll explain what that is in a moment, and you were told to just contact one credit bureau and they'll notify the other two, that is not a credit freeze. That is a fraud alert. Okay? A freeze, in order to place it, you have to initiate it with each credit bureau directly. You can't call one and they'll notify the other two. That is a fraud alert. For a credit freeze, you actually have to contact each bureau directly. Now, what a credit freeze does is that by federal law, it tells the credit bureaus they are not allowed to show your credit report for any new applications or increases of a credit limit. So, for example, if I'm the bad guy and I'm trying to steal Kyle's identity and I want to open an American Express card using his information, I will fill out the application. American Express is then going to pull the credit report. Well, with a credit freeze in place, the only thing they're going to see is file frozen or file frozen at consumer's request, meaning they're not going to see the report. If they can't see the report, they can't make a financial decision. Therefore, the account does not get opened. So a credit freeze is your best defense against new account fraud. It does not prevent imposters from applying for credit accounts, but it prevents them from being successful or the accounts being opened, which is what's crucial. So that's the difference between a fraud alert and a credit freeze. Do you think we need to do any other explanation on that, Kyle? Anything else that's confusing around that?
Is there any reason somebody would rather have a fraud alert as opposed to a freeze?
Oh, that is a good question. It really depends. So if you are someone where you know you're going to be applying for credit in like the next month or two, or maybe you're in the process, you're going to refinance or whatever the case might be, then I would go ahead and put that fraud alert on there because that'll give you some time. Again, it's not 100% protection, but it's better than nothing. And then after you've done the credit business that you needed to do, then put the freeze in place. But really with the lifting and managing the freeze, it's not as difficult as these credit bureaus make it sound. It's really, really easy to manage, especially now with the online accounts. Now, we do have some clients that because of the nature of their business, that they can, having a credit freeze, it would just be lifting it like once a week or every other week. So they have opted to do a fraud alert. Now, if you only do a fraud alert, then I highly recommend at a very minimum you get credit monitoring. Make sure it's monitoring all 3 credit bureaus. If it's only doing one bureau, you're wasting your time and money. But if you only do a fraud alert, get credit monitoring. That way, at least you'll be notified if there are any changes. But if you put a credit freeze, you really don't need credit monitoring because there won't be any new accounts opened.
All right, I guess we can move on to the other one, which is a credit lock. We've been seeing a lot more of those popping up recently.
Yeah, so the credit lock. So let me explain a little bit about what a credit lock is. Because the credit freeze, and again, I said it's mandated by federal law, which means the bureaus cannot show your credit report to new creditors. Well, how do credit bureaus make money, Kyle? What's their business model? What do they sell?
Your credit.
Yeah, your credit reports, right. So if by federal law they're not allowed to show or sell that report, it impacts their bottom line. So a few years ago, I want to say maybe it was like 2016, 2017, somewhere in that time frame, they decided to come up with something called a credit lock. And there was even a TV commercial where it showed a woman, she was sitting, I think, on a park bench with her friend, and her friend's like, "What are you doing?" She's like, "Oh, I'm locking my credit." She said, "Look, it's so easy. I can turn it on, turn it off, turn it on, turn it off." And, it was like this whole convenience factor about, oh, now I'm in control of my credit. They used to charge $9.99 or somewhere around there a month to be able to have this app or to be able to use this credit lock feature. But after the Equifax data breach, they decided to go ahead and make the credit lock feature free. A credit lock, in essence, does the same thing as a credit freeze, meaning it's supposed to prevent the bureau from showing your report to any new creditors. However, why the difference of the name? Well, that's because when it's a credit lock, you're no longer following under the same federal laws as a credit freeze. So in this case, words do matter. Now, you could also be signing away some of the rights afforded to you by federal law for a credit freeze. In the past, one of the biggest things that you were signing your right away to was suing them in a class action lawsuit in the event they screwed up. Now, this was discovered during the time of the Equifax data breach. Equifax started trying to get more and more people to sign up for this lock. Well, that was after they had the data breach. They didn't want to have these class action lawsuits. So it was a very sneaky way of trying to be able to say, nope, you can't sue us. So I think, in my opinion, just do a credit freeze. Forget the credit lock function because you could be signing away some of the rights afforded to you by federal law. Another thing we've noticed, and this was recently with working with a new client, and we always, make sure that they have the right prevention measures in place, which is a credit freeze. And she thought she had a credit freeze, and what we found out, it was actually a credit lock. And this is very common with Experian because the way they manage the credit freezes is a little bit different as far as doing them online. And many times people think they have a freeze when they actually have a lock. So for this particular client, what I found to be interesting is that when we reviewed the credit reports with them, the 2 bureaus where the report was actually frozen, it said right on the report, credit freeze in place. Now, with a credit freeze, you can still pull your own credit report. It's just new account applications can't see it, but you can still see it. And on it, it had this statement that said their consumer has placed a freeze on, there's a freeze on file. But the Experian credit report, where they had a credit lock, it didn't say that on the credit report. So what would happen if a bad guy applied for a new credit account using your identity and you only had a credit lock in place and the credit bureau screwed up and let the credit report go out? Well, if you had a freeze, that credit bureau would be on the hook for that. If you have a lock, maybe not. Because with a lock, there's a lot of fine print. Terms of service, privacy policies, those documents that nobody wants to read. When you're using the system for managing a credit lock, you could be signing away quite a few of your rights.
So unless you plan on using your credit anytime soon, there really is no reason you shouldn't have a freeze placed on your credit accounts.
You're absolutely right. And it doesn't matter what age you are either. If you're a college student and you're not going to be applying for, any credit cards or anything, and even if you do student loans, you really only use or apply for those once or twice a year. So you can lift the freeze during that time frame. So really, there's no reason to not have a credit freeze put in place. And as far as with managing them, this is something we hear a lot from people, don't we, Kyle, about, I don't want to have a credit freeze. It's too hard to manage, or I had one and it was so difficult to use. It really isn't. TransUnion and Equifax, you can set up a free online account to manage your credit freeze, to activate it, and to temporarily lift it. Now, you can always remove it, because once you place a freeze, it's permanent until you either lift it or remove it. I don't recommend removing it, because then you have to go through the steps to reactivate it again. So I would just temporarily lift it. And when you lift it, it's based on a number of days. It can be 24 hours. It can be, 12 months, it can be 6 months, it can be 2 days, whatever you want. You put the start date and the end date for lifting the freeze. With Experian, it's a little different. You can still use their website to activate the freeze, and we'll have the links and everything about how to do this. And as a matter of fact, we do have a blog post that walks you through all these steps about how to activate the credit freeze with each bureau. Make sure that you go to privacy-mentor.com/EP68. And that's where we're going to have all the show notes, and we'll have the instructions of how to actually set up and activate the credit freeze with each bureau. But with Experian, you do not have an online account, meaning no username and password. If you think you've already put a freeze in place with Experian and you do have a username and password, that means you have a credit lock, not a credit freeze. So you want to log into that account, turn off the lock, and then use the method that we're going to provide you the steps of how to do it on the website to activate the credit freeze. Now, when you want to lift the freeze, you go back to that same web page, enter your information, and then you're going to enter the PIN, which will be assigned to you when you initiate it. And then you put in the days that you want it to start and when you want the lift to stop. It's really simple, really easy to do. Takes maybe, 5 minutes per bureau, maybe even less, especially with the other ones where you just enter username and password. So it's really, really easy to manage a credit freeze, and it's instant. The minute you hit, yes, I want to lift this, you get a confirmation and it is lifted with the bureau. You don't have to wait for them. Sometimes they'll say, it can take a couple of hours for it to become active. That's not true. We had a client who was actually sitting at the car dealership and he forgot that he had a credit freeze. So he contacted us. We helped him through the process and literally was like 15 minutes. Everything was lifted. He was able to get his new car lease and drive away from the dealership. So don't buy into the hype of a credit freeze is too difficult and it interferes with the credit process. It doesn't. Now, another thing, Kyle, that we get a lot of people, there's a misconception about. They think that if they have a credit freeze, they will no longer be able to use their current credit accounts, such as like a line of credit or even credit cards. That's not true. A credit freeze has no impact at all on your current credit accounts. The only thing that it impacts are applications for new credit or if you want to increase your credit limit. So if you have a credit card with a credit limit of, say $3,000 and you want to lift that up to $10,000, then you'd have to lift the freeze so that creditor can review your credit report and so on. But if you're just using your credit card or if you're using your home equity line of credit, you can still do that. Having a freeze has no impact on that at all. It's only for new credit accounts or increase in your line of credit.
It will not freeze your credit score either.
Right. Yeah, it has no impact on your credit score. And that's another thing too, and we could probably do a whole nother episode on that, is that there's this whole big push out there right now about, oh my gosh, you don't know your credit score? You have to know your score. It's an important number. Well, it's only an important number if you're applying for credit. Otherwise, it doesn't matter. A credit freeze has no impact on your credit score because what impacts the credit score is how well you use your current credit accounts. Every time you use your credit card and every time you pay off the bill and so on, you pay, your car loan, your mortgage, those sorts of things, all those can impact your credit score. Every time you apply for new credit, that can impact your credit score. So that the score is different than kind of what we're talking about, but that is a question that we do get asked by people. So just to kind of review one more time, a fraud alert only puts a disclaimer on your credit report, but it allows the report to still be reviewed by a new credit application, which means the new credit account could be opened. So a fraud alert is really not the best option for protecting your credit from identity thieves. The better option is a credit freeze. That prevents the creditors from showing your report for any new applications. If they can't see the report, the application won't be approved because they can't make a financial decision. So a credit freeze is the best defense against new credit account fraud. A credit lock, in my opinion, is a marketing gimmick that the credit bureaus came up with so that they could bypass the federal requirements mandated around a credit freeze. In essence, they kind of do the same thing, a freeze and a lock, but with a lock, you could be signing away rights afforded to you by federal law. So if you want to protect your credit from identity thieves, get a credit freeze. If you want to learn how to do it and what are the proper steps, check out our post on privacy-mentor.com/EP68, which stands for episode 68. We'll have all the information on there. While you're at the Privacy Mentor, go ahead and sign up to join our newsletter, get on our email list. We send out information about how to reclaim your privacy in this digital age and protect yourself from identity theft, fraud, and cyber threats. So if you like getting tips, tricks, tools, and techniques about how to protect yourself, go ahead and sign up for our newsletter while you're there. That's it for today's episode. Thank you so much for joining us, and go ahead and get a credit freeze. Your privacy will thank you. Thanks for joining me on another episode of Privacy Mentor. Don't forget to subscribe on Apple, Spotify, Google, or anywhere else you listen to your favorite podcast shows. If you love the show, please share with your friends, and don't forget, give us a 5-star review. For additional information, show transcriptions, and notes, visit kursky.com/podcast.